Joining us now is Laura Champagne, Director of Research and Senior Consumer Analyst at Loop Capital Markets. Laura, BJ's, it's nice. It's good to have, it's good news. Is that an isolated case, or is, the market reacting the right way to real worries around the consumer?
So, Brian, I don't think it's isolated. You can look across my coverage. I also cover off-price, and Burlington's up almost 10% today on an earnings beat, too. We've got a customer who is focused in on value. They typically are, but given this year's a little more inflationary than most of us would have hoped, I think that trend is going to accelerate. So a company like BJ's, where you save 25% as their promise, I think usually it's much more than that. It's the right place to be in grocery today.
Yeah, BJ's, obviously, these are big stores, like a Sam's Club, like a Costco in a way, membership organizations. So the model is very different. But here's what's confusing, Laura. I can look at 100 retail stocks. 50 of them are down pretty big the last year. 50 are higher. How much does management matter right now? And who's doing it really well?
To your point, Brian, I think Costco's considered the best management team in retail, but you got to look at the business model. It's the model that matters. So it's not just growth that we value stocks on, it's risk. And these warehouse clubs, the majority of their income comes from membership fees. Their consumers very rarely rotate off the memberships because they save so much money. So that sort of annuitized income stream is a rarity, which is why you see such high multiples on companies like Costco or, its little brother, BJ's Wholesale, having a good day today.
Let's talk about cruise lines. You actually also cover them. So they're consumer. They're not stores, but, well, actually, maybe they are floating stores on the water now, Laura. Who knows? A lot of these companies like Royal Caribbean, they've been hit because there's fear that a new tax, they're all, flagged in the Bahamas and, Solomon Islands, wherever it might be. And there's concerns about a new tax coming. Has the market maybe overreacted a little bit to those concerns?
We just raised our rating on Royal Caribbean a couple of days ago because the stock had traded down nearly 15% in a month on those tax concerns. We think over time, investors are going to pay for growth, and the entire cruise line industry is about 5% of travel. Orlando alone is 17%. And once again, a trade down or a more value-oriented option, cruises on average are 25% cheaper than land-based vacations. If you look at a Disney World 7-day vacation, compare it to a 7-day Caribbean cruise, the cruise is half the price and arguably easier to execute. So we think cruise lines, as they start to use technology better, RCL, Royal Caribbean, is replacing its reservation system that's almost 30 years old. We think new technology is going to drive more people to the cruise industry, and we like it as one of these rare pockets of growth in consumer discretionary this year.